What is the purpose of the presentation today is to have a clear understanding of the cost categories that apply for your action, of the cost eligibility rules with a focus on personal cost that, as I already said, and we will have some general information for the currency, for the reporting and the conversion into euro for the beneficiary that have other currencies, and also some general information on lump sum grants if I will be able to present in time, let's say. So let's see. The grant agreement defines in details which costs are eligible for reimbursement under the Digital Euro program. It sets out the eligibility criteria that apply to all cost category, as well as specific rules for each category. And in order to become familiar with these rules, you need to become familiar with these rules, and this will help you to avoid errors in the budget part and also in the reporting part. There are five main categories in Digital Europe program, five cost categories: the personal cost, the subcontracting, the purchase cost, other cost, and indirect cost. Some of them with subcategories and so on. Regarding the form of cost in Digital Euro program, we can have actual costs that are mostly used by you, but also we can have unit costs that are based on predefined units, indirect cost, which is calculated at a flat rate of the direct cost, and we can also have lump sum that is a pre-agreed fixed reimbursement cost. And we will try in the next slide to tackle each category and the general and specific eligibility criteria. The Article 6.1 of the Annotated Model Grant Agreement defines the general criteria for the eligibility for different forms of cost, but today I will try to present shortly the general eligibility condition for the actual cost, since it's the form of cost that is mostly used in the action. So, in order to be considered eligible, the actual cost must be actually incurred by you or by the affiliated entities, and the actually incurred means no estimated, no inputted or budgeted cost. The cost must incurred within the official project duration, with some exception that are for the travel costs, for the kickoff meeting, or costs for final reports that are submitted with 16 days. Should be indicated in Annex 1 and Annex 2. Should be incurred in connection to the action and the necessary for the implementation. Should be identifiable and verifiable, which means that should be properly recorded in your accounts, and must comply with the national laws on taxes, labor and social security, should be reasonable, justify, and to comply with the sound financial management principles. Which means that should contribute to the objective of the project in an economic, efficient, and effective manner. Let's tackle the first category, which is the one that is with most interesting one and most heavy one, I would say. And this budget category of personal costs cover the following subcategories. A1, the employees or equivalent, the natural person working under direct contract, the personal seconded by a third party against payment, and the cost for SME owners or natural person beneficiary. And when I mean SME owners, I mean the owners of the beneficiary that are with a SME status and are not receiving a salary. And for natural person beneficiary, we mean the beneficiary that are natural person not receiving a salary. Depending on the type of the personal cost category, they must be declared as actual or unit cost. And of course, they must comply with the general eligibility criteria condition that I already mentioned, according to Article 6.1, for each personnel category. And the calculation method will depend on the type of cost and the provision of each personal category. And let's explore further the cost for the employee, which is the most used. So you have for the cost for the employee, you have two options. You can declare the actual personal cost, which is the standard case, or you can declare cost as a unit cost, or known as average personal cost. For the average personal cost, you have a special, you have the commission decision that is available. I put the link here, but you also have it in the funding and tenders portal. In both cases, you should have a standard employment contract with your employee or equivalent appointing act. Like I said, the cost should comply with the general and specific eligibility rules. The number of the equivalents for a person should be identifiable and verifiable according to your monthly declaration of the timesheets, and of course, they cannot include overheads. Generally, for each employee, you may include in the actual cost that you will declare, you can include the fixed salary, you can include fixed complements, like family allowance, you can include variable components, social security contribution, in general, other costs and payments that are linked to the remuneration if they are justified as personal costs in your account, in your remuneration practices. And you cannot include part of the remuneration which has not been an actual cost for you, or payments of dividends to the employees. Uh, Variable complements that are based on commercial targets, or bonus that are arbitrary, or bonus that depends on budget availability. But for more for more information, you will find in the article 62A1 the general principles. Let's tackle the calculation of personal cost for your employee. This in this program in general, in all programs in 2000, from 2021 2027 programs, there is a simplification done by the Commission with a wide formula that is valid across all EU programs that cover most situations that are encountered by the beneficiary. So in principle, you should use a single corporate daily rate per person and per reporting period, which means that for an employee, for a reporting period, you should multiply the daily rate with the number of day equivalents worked on the action during the reporting period, and you should multiply with the working time factor for the respective employee. The daily rate calculation is based you should divide the actual cost for the person for the entire reporting period. And I mentioned the actual cost earlier. Yes, what are eligible and what is not eligible. And this actual personal cost should be recorded in your usual accounting practice and reflected in your statutory accounts. And so this actual cost will be divided by the maximum declarable day equivalent with a pro rata of 215 days. So maybe maybe you wonder where this famous number 215 comes from. And those of you working on the other programs like Horizon 2020, for example, may recall there was the option to use standard of 1,720 productive hours per year, and now with 18 days per 80 hours per day, this converted to 215 days. So we divide 1,720 by 8, and we have this famous 215 days. This number of months within the reporting period, which can be the length of your reporting period or the length of the employment of the person during the reporting period, which one is the one that is shorter, let's say. But to better understand, I will give you an example. So you will have, for example, a project manager that work full time for a reporting period with a duration of 18 months. So from October, let's say October 2023 until March 2025, end of March. How you calculate the personal cost for this employee? So you will divide the actual personal cost incurred for that person during the reporting period And you will divide this by the maximum declarable days. In this case, the maximum declarable days is 215 divided by 12 and multiply with the 18 months for the duration of the reporting. This daily rate, this is the daily rate. We multiply this daily rate with the days worked on the action from 1st of October 2023 until March 2025. And this will be the cost for one employee. Of course, you should do all this calculation for all the employees, and all this personal cost will be added, and this will be declared in your financial statement. Another example will be if the working time changes during the reporting period. So part-time to full-time or vice versa, or if you have a change of the contract. In this case, you should calculate the maximum declarable days separately for the months before and after the change, and sum up them to calculate the maximum declarable day for the reporting period. For example, we have here an employee that works 6 months with a 70% workload and 12 months with 60%. So you will divide in two, and you will do for the first part, you will divide this to 250 divided by 12, and you multiply with the 6 months, and after that you multiply with the working time factor. After that, like I said, you will add up the two, and you round up to the nearest half, because all the maximum declarable days will be rounded to the nearest half. And here you will have in total the number of maximum declarable days that will be used as a denominator for your daily rate for a person that had changed the contract from part-time to full-time, or whatever is your case. Another example will be for a reporting period with 18 months from July 2024 to December 2025, and you have an employee that is hired 1 month after the reporting period starts and is hired with a part-time contract. How will you calculate the maximum declarable days? You will define again, you will divide this 250 days by the 12 months. You will multiply with 17 months, because this is the starting date of the employee, the contract, the starting date, and you will multiply with the part-time, which is 0.5. So for a full-time, you'll have the coefficient will be 1. For the part-time with 50%, you'll have the coefficient is 0.5. In the end, again, this is the calculation. You'll have 152.29 days that will be rounded up to the nearest half, which is 152 days. If the personal costs for a person, for example, are included in several funding programs, not only DEP, let's say, could be Horizon Europe, could be Horizon 2020, could be national projects, the personal cost must be calculated for each program according to the rules of each program that you will have. This will most probably lead to different numbers and may also lead to different denominators, because non-eligible costs can differ. And in order to prevent the double funding, the personal cost per person and year must not exceed 100% of eligible personal costs in all EU projects. That's why we have this horizontal ceiling that you may be seen in the annotated model grant agreement, saying that the number of day equivalents declared as work on the action in all EU and Euratom grants is maximum 215 days per calendar year, or a pro rata if you have less than a calendar year. And we have also a reporting period ceiling when the number of day equivalents to be declared is kept at the maximum declarable day equivalents per reporting. So this 250 days is the maximum declarable number of days per year, regarding of your national law. And you should declare only the days that are worked in the project, with no sick leave or annual or vacation leave, because this holiday and annual leaves are already included in the calculation method. And as an example, let's say that the maximum working days in your country in 2025 is 251. the maximum number of days that you can declare in DEP is 215. And this annual cost, including the annual leaves, will be distributed over these 215 days. So let's say that in September this month, an employee worked 12 days on the project and took 6 days of vacations. And in this case, the number of declarable days is 12 days and not 18. You don't add up the vacation days. For the days worked, the days worked is the sum of the day equivalents actually worked for the action. And this also should be rounded to the nearest half day. This comes from your monthly declaration on the day spent for the action. And you have the template in the funding portal. I also put it here. Or can also be based from the time records that you have, either on paper or on computer-based time system, depends. But if you keep the monthly declaration and also the timesheets, they must be consistent, because in case of discrepancies, only the documents regarding the lower amount of days will be accepted. What is also important to mention here is that you don't round figures in time declaration, in timesheets. You use the rounding for the maximum declarable days and for the number of days worked for the action. For example, if a person worked, a standard working day for a person is 8 hours, and he worked only 2 hours on the action during a given month, only 0.25 days equivalent should be recorded. So you should divide 2 per 8 in order to find the number of days worked. The time declaration, so according to the template, should be able to enable to identify the staff. You should see the report. You should report the days per month, and also a requirement is to sign signature of the staff and the supervisors with the dates of signature. So as a principle, the template is to be used as it is. But if you need further adjustments in terms of formatting, you don't want to be per year, for example, and I think I've seen also a question regarding this. You can use also 1 page per month instead of all months in 1 page. It's possible under your responsibility, that all the information that are required in the template is included. So the project number, the acronym, the work package worked on should be there. For those of you who don't use the monthly declaration, even if it's recommended, so as a best practice, we recommend you to use the monthly declaration, because this will be easier for you in order to see the number of days worked in a reporting period. But if you don't use the monthly declaration and instead record the time in hours, in order to calculate the personal cost, you should convert the total hours into day equivalents. So there is a formula behind where these day equivalents are the number of hours that worked on the action during the reporting divided by the hours of the day equivalent. And the rounding rule is what I said earlier, round to the nearest half. If you have 17.79, will round up to 18 days. If you have less than 70.64, you will round up to 70.5. To convert for this conversion of hours into days, there are 3 options. The choice has to be made based on your practices. We have 3 options, like I said: fixed value, 8 hours per day. You can have average working hours per contract, where the hours are per day. Hours can be per week or per month, or can be hours per year. And I provide you some examples here. And you can have your usual accounting practice that is based on annual productive hours. But what is important is that you are not obliged to use any particular option for the conversion. Along the method that you choose should be consistently applied. And the level of consistency requires to use the same option per group of personnel employed under similar condition. For example, they have the same type of contract, the same cost center, and this means that you cannot apply the most favorable option for each employee individual. This is very important. The other option to declare the personnel cost for the employee is the unit cost or the average personnel cost. Providing that this is consistently used with the same type of staff, of contract, and across all the projects. The calculation method should be in line with the Commission decision. That again is available on the portal. I've also put the link here. Should be based on your accounting practices. You should use as the base the actual personnel cost that is recorded in your accounts. You should foresee a regular update of this unit costs if they are used. Pay attention not to include ineligible costs and to comply with the principle of no double funding. The calculation of the unit cost is the same as the one that I showed you earlier. The total amount is the workday equivalents multiplied with the daily rate. Exception is the daily rate is calculated using average cost instead of annual actual cost. And again, the calculation can be made per reporting or per calendar year, but should be in compliance and consistent with your usual unit cost calculation method. The other two categories for the personal cost are the natural person working under direct contract and the seconded person. The person in this category, in order to be eligible, the persons must be hired for natural person with a direct contract that is signed by you and the natural person, not through one other entity. Or a contract that is signed between the beneficiary and the legal entity that is fully owned by this natural person, which has no other staff than the natural person being hired, it's obvious. And for the seconded person, you should have a seconded agreement with the employer of the natural person. The hired person should be paid as per working time and not per expected results or missions. The beneficiary must organize and supervise the work in a way that's similar to the employees. Similar presence, and the cost must not be significantly different from the cost of your employees. It should correspond exclusively to the remuneration of the persons and the taxes. The calculation is the same as for the employees. The work days equivalent multiply with the daily rate. But here the daily rate depends on the direct or secondment contract provisions. Could be the daily rate in the contract, the global amount of the contract for the work divided by the number day equivalents to be worked, or the annual personal cost divided by the pro rata of these 215 days. And the calculation should be done per reporting period. For the last subcategory of cost of personnel, A4, the SME owners not receiving a salary or natural person beneficiary not receiving a salary. The calculation is done, again, is the same, day equivalent or the amount per unit, which is the daily rate. The calculation is automatically done by the system, so you must only indicate the number of days that are worked on the action, and the cost will be automatically calculated. For this, the amount per unit is prefixed in the authorizing decision and is adjusting depending on the country where you are. And you have the details and links in the next slide, but I will not present it today, but you will receive it. The second category for the cost is the subcontracting. This budget covers the subcontracting action task, the contracts for parts of the project that are described in the Annex 1 that are not implemented by the beneficiary itself, by another entity, which is called the subcontractor. The costs are calculated based on actual cost incurred. Therefore, the amount charged must correspond to the amount invoiced by the subcontractor. They should be in line with the general eligibility condition mentions under Article 6.1 and the wording using your purchasing practice, ensuring best value for money or lowest price and no conflict of interest. For best value for money, you should consider the quality of the goods and services that are provided for the action. For example, the best price quality ratio that applies in the general eligibility conditions, where when they say that the cost must be reasonable and comply with the sound financial management in the subcontracting context. And this no conflict of interest, best value for money or lowest price, the safest way to ensure all of this is a competitive selection for the subcontractors. So pay attention how you choose the subcontractors. But more details and specific cases you'll find under this Article 6.2b and also Article 7 in the model grant agreement. I will go quickly to the purchase cost, but I will present the subcategories are the travel, accommodation and subsistence, equipment, other goods, work and services, but I will focus more on the last two categories. As I said, you can find details and specific cases under the relevant articles of the annotated model grant agreement. The equipment, what covered the purchase or renting or leasing of equipment, infrastructure or other assets that are specifically for the project, should be declared as actual cost. Depreciation and full cost can be eligible. Different options are available depending on the program, and you can see also in the call. Should be in line with your purchasing practice, best value for money, lowest price, of course. No conflict of interest. This should comply with security requirements in some cases. And the cost must be recorded under a fixed asset account in your accounting records. Of course, keep records of procurement documents, proof of payments, invoices, and so on. The default option to declare equipment is the depreciation. So you should be aware about the depreciation rules. Always follow your organization internal accounting policies for national accounting standards for the useful life and the residual value. You should pay attention to the proportion of use. Only the portion of the assets that is used for your activities can be charged to the project. Ensure the depreciation is prorated correctly for the reporting. And like I said, keep records of the purchase and the depreciation calculation, justification of the percentage of use. And I give you here an example for how to calculate the depreciation for a reporting period of 1 year. For example, you have a high performance computer with a purchase price of 60K, useful life of 5 years with zero residual value, and with the straight line depreciation as a depreciation method that is used for the project only in percentage of 50%, so half of it. And the reporting, like I said, is 12 months. So the annual depreciation will be the purchase price minus the residual value, which is 0, divided by the number of useful life, which will give us the 12K per year. The depreciation for the project will be the annual depreciation multiplied with 50%, which will give us 6,000 euros to be declared as eligible in your project. The third category of the purchase cost is other goods, works, and services. And here you can have, for instance, consumables, supplies, promotion and dissemination costs, translation costs, costs related to intellectual property rights, and costs for certificate on financial statements. Of course, these items should be both in according to your purchasing practice, best value for money, lowest price, no conflict, are declared as actual cost and should comply with the security requirements. I believe that it's important to explain a little bit the difference between the subcontract and contracts that are related to the purchase, because subcontract concern the implementation of an action task by a third party, external, and the price of the subcontract will be declared as subcontracting in your financial statement. But the contracts or purchases concern goods and services, equipment that are necessary for you to implement the work. And the price for these contracts will be declared under the category other goods and services or equipment, depending on the case. Best value for money principle and no conflict of interest apply in both case of contract and subcontract. So, if the agreement with the third party are based on business condition, the price charged to the beneficiary includes a profit margin. And if the third party is not implementing an action task, therefore you will have a contract. Yes, and you will declare the cost under the goods and services or equipment. If the agreement with the third party is based on business condition and the third party is implementing an action task, you will have a subcontracting, and this will be declared under the same category of subcontracting cost. For the other cost categories, in DEP action, if eligible, you may charge cost under other cost categories for the following: for the financial support to third party, as actual cost, and internal invoice goods that will be declared as unit cost. The eligibility condition for the financial support. So the selection criteria and the procedure should be outlined in the call condition. The general and specific eligibility condition of cost should be outlined in the Article 6.1 and 6.2d1 of the grant agreement. This involves providing financial support to third party as part of the action, which is important. These recipients do not implement action tasks, but benefit indirectly from the EU grant. And the beneficiary must detail information on financial support in their periodic and final reports, which include the number of recipients, the amount distributed, the type of activities. My colleague Mara already presented to you how to do this in the continuous report in the financial support tab. It is important to know that the implementation of the financial support remains the sole responsibility of the beneficiary. So you need to monitor them closely and make sure that the financial support are used in line with the EU grant agreement. More info, like I said, for this specific article, you will find in this specific article 6.2d1 and in the guidance for good practices for implementing financial support, and you have the link at the end of my presentation. For the internal invoice goods, this budget category covers the cost for goods and services which are produced or provided by your organization directly for the action, and these values on it's the basis of usual accounting practices. You can have self-produced consumable, you can have specialized premises for hosting research, specific research devices or research facilities like a supercomputer facility or an electronic microscope. What is important is to declare the cost as unit cost in accordance with your usual accounting practice, and you need to define both the unit and the methodology to determine the amount per unit. And since this is a special cost, it's like a mixed cost. That's why I I advise you to go in the specific article in the annotated model grant agreement and to see if you comply with this rule. So if you don't have a specific methodology for this type of cost, don't put it there. Just go on the other categories and see personal cost, actual cost, purchases, and declare the cost there. You should have an accounting that can perform this and see the methodology that is behind. So go there and see if this will apply to your action. Keep a trace keep a trace of the costs that are declared to the supporting documents, because the evidence for each category of cost that I presented must be verifiable, auditable, and available. And for this, I advise you to go and read carefully the Article 20 from the Annotated Model Grant Agreement for the record keeping of each form of funding and cost categories. And you must keep the evidence at least 5 years after the balance is paid. After the balance is paid. After your final payment is done, you should keep the documents. Of course, the example that I provided here is a non-exhaustive list, so there can be more or less, depends, but these are the main documents that you should have in order to provide that the costs are eligible in case of audit, let's say. And the two other points that I would like to mention, I'm not sure that I'm in line with the time. For the currency conversion rules, as Mara said, the cost should be reported in the financial statement in euro. For beneficiary with accounting records in euros, the conversion of cost should be done according to your accounting practices. But for beneficiary with accounting records in other currency than euro, the double conversion rule apply. And this double conversion rule is mentioned in the data sheet. And like I said, for the ones that they don't have euros as a currency and must convert the costs that are recorded in their accounts into euro. In their case, because you will be receiving the EU contribution in euro, while you incur costs in your books in a currency other than euro, finally you need to convert back to euro in order to report to us. That's why you should use an average exchange rate based on the month within the reporting, and you should use the average of the daily rate used using editable charts on the ECB website. So there is a special website, and I provided here the link, is also on the mentioned in the annotated model grant agreement, and this will show you step by step how to arrive to this average daily rate. Of course, also for this, you should keep evidence of the exchange rates used, like financial records or systems logs. For the last, reporting in lump sum grants. Like lump sum is another form of cost, is a pre-agreed fixed reimbursement cost, as I said at the beginning, and is already settled at the GAP level. Therefore, the lump sum should correspond to the amount of lump sum costs that are set out in the Annex 2. And the work must be carried out in accordance to the Annex 1, and the output and the results triggering the payment of the lump sum must have been achieved during the action duration. Therefore, the reporting periods and the technical reporting are focusing on the completion of the work packages, and you don't have the obligation anymore to report the actual cost and the resources. And the financial report is much simple and to a large extent is automated. The financial statements are automatically generated because are based on the accepted work packages and the corresponding lump sum shares. And this lump sum share is fixed in the grant agreement for each work package. And once the work package is completed, we will go for a payment. That's why I provided here an example. You can see the interim payments paid the lump sum shares for the completed work packages. For example, working package 1 in the interim is paid in full. It's done, it's completed, so we will be paid in full. For the one for the working package 2 is not completed, so we will pay in the second reporting period, let's say. You should use the standard reporting template. An incomplete work package can be completed and paid in a subsequent reporting period. And as I said, at the final reporting is possible to declare partially completed working package and to enter the percentage of the completion. So in lump sum payments do not depend on successful outcome, but on the completion of the activities as they are described in the description of action. But the work packages can be modified through amendments. We didn't start yet the payments of the lump sum. Therefore, these are general information. More information will come, and you will have. I also attached the guidance for the lump sum grants to help you understand better how this is working.
Many thanks, Irina,
these are some available resources. And to conclude, I would say that it's essential to remember that understanding and adhering to the eligibility rules is the key to ensure that your cost will be accepted and reimbursed under the Digital Europe program, because we are here to help you in spending public money, and we don't want to reject unnecessary costs. That's why make sure that your costs are in line with the rules. And we strongly encourage you to maintain accurate records, consult the grant agreement, the annotated model grant agreement that we are seeing like a Bible, and the other official guidance that are regularly updated. And if you have any doubts or need for clarification, do not hesitate to reach out to us, to your project officer, to the financial officer assigned to the action. Because for us, a proper planning and compliance with ensure the success to the project and maximize the impact of your funding. It was long. I thank you very much for your attention, and we look forward to seeing the success of your projects in Digital Europe program. Thank you so much.